UnitedHealth Group stock, ticker symbol UNH. On the 13th of October, UNH presented their quarterly report where they beat on EPS and revenue. For the upcoming earnings, analysts think they will miss. Year to date, the stock is up 4%, underperforming the S&P 500 big time. And people love UNH stock because of multiple reasons, and one of them being the dividend. And I understand why, with dividend yield at 1.4%. But take a look at the 5-year compound annual growth rate, 16.4%, looking really good. So could this be the perfect moment to buy UNH stock? Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does UNH do? UnitedHealth Group is one of the largest private health insurers, providing medical benefits to about more than 53 million members globally, including 5 million outside the US. Along with its insurance assets, UnitedHealth's continued investments in its Optum franchises. So first off, let's dive in the most recent earnings report. Revenue was reported at $92.4 billion, up 14% year over year. To me, this looks insane. The company is able to grow at high numbers while already being this huge company. Earnings also grew 14% year over year, which is very nice. Earnings per share were reported at $6.24. In here we see the same numbers year over year. The thing that I really like here is the fact that net margin is increasing versus the previous quarter. Year over year the number is still down a little bit. And if we zoom in on the United Healthcare segment, we see that revenue was reported at $69 billion, up 30% year over year. To me, this looks really good. The operating margin also looks really good. It is increasing at decent numbers. And when we check the numbers for Optum, we see that revenue increased 22%. However, the operating margin is decreasing year over year. But quarter over quarter, it is still looking good. And now that we know a bit more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. UNH is a $501 billion market cap company. PE ratio is at 23, which could indicate that they are overvalued right now. Later in this video I will show you my 3 price targets for UNH stock, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at $359 billion, and in this graph we see that revenue went up in the long run. To me this looks really good. I think there are only a few companies to be this stable during all the market crashes that we had. Margins are looking pretty good as well. It is increasing over a longer period of time. In the past couple of quarters it was decreasing, but most recently it started to increase again. EPS is looking really good, again steady growth over the years. Analysts expect that from here EPS will grow at 12 to 13% a year, which is really nice. For the revenue, analysis expect pretty much the same pattern, but with lower growth numbers. But again, looking really good to me. Return on assets is sitting at 8.3%, which is a decent number. Return on equity looks really good, but the most important number, return on invested capital, is sitting at 14.8%, which is a great number. And it is also higher versus the 5-year average, which is also very nice. Current ratio is at 0.39, which is looking a bit too low in my opinion, especially since the historical pattern was looking pretty steady. So keep an eye on this number. Right now UNH has $63 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. UNH has roughly 44 billion in total cash, so they can pay down a big part of their debt. To me, this looks really good. But it is still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run. Again, looking at how steady this is growing. Shares outstanding are decreasing, which is something that I really like. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 1.4%, which is a decent number. Annual payout is at $7.52 and payout ratio is at only 29%. I prefer 50% or lower, so right now they have 71% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at 16.4%, which is an insane number. And they have 13 consecutive years of dividend increases. And if you take a look at these numbers, the dividends paid since 2012, you see that UNH did increase the dividends at a high rate. But the growth numbers are slowing down a bit. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see that it is really steady over a longer period of time. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to grow at similar growth levels in the future. Overall these dividends look pretty good to me, but how about the historical returns? I decided to compare UNH stock with the overall market, in this case the S&P 500. On the 5-year chart we see that UNH beats the S&P 500 big time with 119% return versus 79% return for the S&P 500. This result is including dividends. On the 1-year chart things look pretty different for UNH, with a 8% return versus almost 15% return for the S&P 500. On the 6-month chart it is again looking different, with UNH returning 13.8% including dividends, and the S&P 500 is sitting at 10%. On the 1-month chart it is again the S&P 500 beating UNH, but this time only a small difference. Bottom line, UNH beats the S&P 500 long term, and short term it looks pretty interesting. So could this be the perfect time to buy UNH stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 6, 8 and 10%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 6, 6.5 and 7%. For the free cash flow margin I'm putting in 7, 7.5 and 8%. For the PE ratio and the price to free cash flow I'm putting in 20, 21 and 22. It is a big company with a moat in some areas. Next to that, they are still capable of growing at high numbers. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now, UNH stock is at $540. I hit analyze, and we see only a few green numbers. We have a low price target of $410 to $479. We have a mid price target of $533 to $615. And we have a high price target of $689 to $788. To me, the mid price target is the most justified here, indicating that this stock is undervalued. My final conclusion on this company that it is the perfect dividend stock in my opinion. They are capable of growing at a steady and consistent pace. They increase margins as well. There is enough cash to pay down a big part of their debt, so all these things are looking really good. Valuation doesn't look too bad either. I would love lower prices to be honest though. For now I think I will wait a little longer and hopefully a dip occurs so I can buy at lower prices. I would prefer a range of $480 to $500 to be honest. And I can't wait to buy shares of this company because I'm so impressed how steady and consistent they are over a longer period of time. So let's see if this happens anytime soon. If not, then I will keep analyzing them from time to time. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.